Hello, this is Jacob here with a small business chat. Joining me today again here is Matt Swires. How are you doing today, Matt?
I'm doing so well. It should be illegal in a few states, Jacob. How you doing?
Doing fantastic. It's a beautiful day outside. Here to talk about investing and investing in certain businesses, investing in certain stocks, investing. That's what we're talking about today. No better person to talk about it than Mr. Matt here. I do have some questions for you today, some things to go through for you to answer to kind of give everyone that's listening right now a good piece of advice of what to do when they first start thinking about investing. Maybe they've come across this very early in their lives. Maybe they're like, maybe 18, 19, 20 years old and they want to start doing something, get their life started, have a like nice nest egg whenever they're in their 50s or 60s, whatever the case may be. Let's go ahead and start asking you some questions. You ready?
Yeah, absolutely. And if I can just, sort of give us a little bit of a, I'm going to try to give us a little bit of a roadmap as well. Like, so, from my perspective, because, business investing and, why you should have a business investment account and, where to how to fund it, and such. And, basically at the end of the day, how to invest. And of course, because I've seen enough of these people when I watch my YouTube videos and all that, always say, even though they're giving you stock picks for the day, they're like, and we're not giving you actual investment advice. I don't know why they say that, but there's got to be something legal. So we're just going to say we're not actually giving you per se investment advice. It's just general information. You can choose to use it or not. Fire away.
Good disclaimer, Matt. Good disclaimer. Awesome. All right. So let's go ahead and start off with a really simple question. Can you tell us about your background and how you started investing, maybe back when you were maybe very young, or maybe just when for somebody introduced you to starting investing? Maybe you can walk us through that.
Yeah, sure. I mean, my first thing, in investing and basically trying to make yourself, better, goes all the way back to when I was about 10 years old. And back in the olden days, you actually had to go and talk to a stockbroker, and my mom and dad had a stockbroker, and I lived at Merrill Lynch. And I literally went in and the dude, and I was like, I heard of this upstart company called Apple. And I wanted to buy a couple shares of Apple. And back in the day, I think the Apple stock was maybe $25, $30 a share. This is like maybe 1980, 1981. And, I ended up buying like three shares because the stockbroker handled my parents' account. So he was willing to just put an order in for three shares. He had to literally, back in the day, they called the floor and put in the order for three shares. I ended up making some money on it, but, I was hooked at that juncture and, sort of really understood the concept from an early age that your money should work for you, whether it be personally or if you happen to have extra profits in your business. You shouldn't just let it sit on the wayside. You should basically have a system whereby you invest your profits so your money becomes an additional employee working for you. So that's sort of a little background of, when I started investing. Obviously, there's a lot between now and my 53 years on this planet, right?
Gotcha. Awesome. Next question. What inspired you to become an investor and what keeps you motivated in the world of finance?
Well, yeah, that's a good one because, and again, I'm going to bend this into like sort of a business, if you will, you know, so you can sleep at night. I mean, I think that's the number one reason why, invest because, and you have a long-term plan such that, at some juncture, you can actually retire if that's your goal, and then live off of the finances that you've actually put away for a rainy day. For me, for anyone who knows me, I have no plans to retire ever. That's I would just I'd be too bored. But really the why, back to your question, and again, I'm a huge advocate of layers of protection and building multiple streams of income. And so when you talk about that and we look at small businesses today, I want to give a shout out to a guy named nope, can't do his last name. Mike Michalowski, I think is how you pronounce his name. Anyways, he wrote the book Profit First. I highly recommend anyone, pick it up if they're, looking for a good book to read on business. And in Profit First, one of the main things that he does is he basically says, listen, just segment out your money. Like, so basically for every dollar a business makes, 10 cents to go here, 20% should go to pay taxes, 10% should go to profit, 50% should go to overhead, I think is what he says. But when you put away that profit for the rainy day, What are you doing with it? And I think in the olden days, you would just sit and let it sit in a bank account, earning 1%. But now with the fluidity, fluidness, fluid, is that a word?
You're
Fluidity?
close. Yeah, fluidity. Yeah.
Close? You think I'm going to go with close. What the hell? Of like, investment accounts, like, just one of the investment accounts to one of the investment services I just use used to be actually like, 3 or 4 days till you could get your money, out of one of these people. Now you can actually sell your stocks, and with some of them, you can actually get the money out the exact same day. You don't have to even wait for it to clear, because there are different ways that they actually do that. So you can wire it out. So rather than let your money just sit there and not do anything for you, put your money to work for the business. So just like you say, like, well, I have 10 salespeople or 15 salespeople in my company, whatever it is, well, that your money should be a salesperson for you as well. So, if you can actually get 50, $60,000 or $100,000 and put it away in today's market, sometimes you're making $1,000, $2,000 a day just on that money and investing. So coming back to the why, um, you want to learn as a small business to be able to segment out that money. And again, I recommend the book Profit First for his concepts on that, because I thought he really did a great job in segmenting that out. But then with that profit that you hopefully have in a business, then create that next level in that stream of income and invest it. Don't just let it sit there by the wayside, and just sit there and honestly get devalued through inflation in this country. You need to invest it and make it work for you to grow it, and that becomes a completely separate arm of any small business, which I highly recommend if you get there. So, anyways, how am I doing so far?
You're doing great. You're doing great. I agree with everything you just said. Again, just a lot of people, believe it or not. I mean, my dad. We can actually steer this into another topic. My dad's the first one that actually even talked to me about it, and he said, do the wrongs of what I couldn't do, which is he wishes that he back in the day when he was my age that he invested, but he just took all of his money that he made from what he was doing for work, and he just put it towards bills and towards that, which is definitely applicable and also very you can understand that, but at the end of the day, you want to try to invest in your future and your life and your retirement, et cetera, et cetera. So my dad's the one that first started talking to me about that, and as soon as he told me, I wish I did that when I was your age, kind of made
Oh
me
yeah.
think a little bit more to myself, like, man, I probably should do this, and that's what got me started on investing in the first place. So was that something that maybe came to you at first, or was there a certain thing that maybe made you start that sooner?
Oh yeah, and so I was always fascinated with it. And one of the other big moments in my life, and this is from a personal perspective, was when my father's father passed, and my dad, and my grandfather was a great man. Obviously, I mean, most people love their grandfathers, and he again was the greatest generation, World War II, etc. And he basically, had four grandchildren, and then two children. And each of us from his estate got a lovely, check. And when my father handed me the check, it was his job to hand to his two children, basically the checks. And then my aunt, was her job to hand the check to her two children. I don't know what she said to her two children, but my father literally sat me and my brother down, and he said, now you can go out and you can spend this and do crazy things with it or whatever. And by the way, just, so in the interest of full disclosure, it's about 20 grand, if I remember. And he says, this will double on average. And I want to think that this is maybe every 7 years it doubles. That's what they always say. If you conservatively invest it every 7 years. And he says at the time that, my grandfather passed, I believe it was 1997. So I was 27 years of age. And, he basically said, so you're 27, you're not going to retire for another, 40 years, 35, 40 years, assuming you retire. And so 40 divided by seven, it'll just round it, give or take, six times this would double. So it's exponential growth. And so he's like, listen, if you don't touch this, if you just literally put this away in a bank and it doubles every 7 years on a conservative investment, think of all the money that you're going to have, by the time, just on this 20,000 is. So what I always come back and tell young people is you don't see it now, but on a perspective forward, and this is also just for businesses as well, like start putting it away till it hurts. Another really good book that everyone should read is The Millionaire Next Door. And that's really what it talks about, which is that live within your means, and invest. So, and take what you have and invest, because oftentimes the poorest people come retirement are, believe it or not, the neurosurgeons who are making over $1 million a year, but they've got their, they got their, Mercedes and all that sort of stuff, but they're all leased, and they're overextended. Where the person that's living in a normal house and all that sort of stuff ends up retiring with millions and millions of dollars because they were putting, a nickel away here and a nickel away there, and then they just didn't touch it for 50 years. And it's just such a wonderful way to live your life, because once again, coming back to the why, so you can sleep at night. I mean, because as the great Steve Harvey says, having money makes problems inconveniences. And I so agree with that. It's a fantastic way to look at life, right? But you don't know who
Exactly.
Steve Harvey is, do you?
I know who Steve Harvey is.
Okay. We were doing an earlier one, and I think what it was, we just had a bad connection. We couldn't hear each
All I
other or
heard
something.
was Steve. Do you know who Steve is? I'm like, I don't think Steve works for us, but
Yeah, see, Steve definitely don't work for us. He's in a different income level and a different zip code and all that sort of stuff. He done well. So
exactly.
he's worked hard for it, and he deserves every nickel he's earned, as he'll tell you like two or three times over, because he's lost it two or three times. But it is what it is. So to the answer of the why is just, and again, this goes to small businesses as well, personal or small business, strive, in a business context, they always say, you want, I can't remember, 3 to 6 months of expenses, so in case.
Hey there, Matt. Have we lost you?
um
Yep. Okay. Go
but
ahead.
but am I back?
Yep. You're back. Yep.
Okay, cool. All right. Well, good. But because that stuff that when you lost me, never could say again. Freaking brilliant. Anyways, but but again, it's just, personal or business context. You just always want to basically make sure that you're putting, put away till it hurts, because at some point you may need it in the business. And if you don't, hey, that's great. But then it's a bigger profit distribution at some juncture out there, when you want as, the owner or whatnot. But man, I just sleep so much better at night. And you've heard this from me around, the company that you're familiar with me working this, you know, a couple of years ago, we were down, we had nothing and such. Today, we've got, that investment account, on a side, that I now know that if, push comes to shove, we have the ability to draw from it. And that makes life so much easier to run this company. So much easier, right?
Yeah, it kind of lets you rest easy whenever you know you have that in your back pocket. I'm sure just not only just for personal reasons but also business reasons as well. So, speaking about personal things, do you mind sharing maybe some investments that you've made that were big hits for you, and maybe some investments that you've made or have currently?
Yeah, absolutely. I mean, it only helps, right? So, I mean, again, I'll always reference a book. I highly recommend, anyone, go back if they want to start investing and read Peter Lynch's, Beat the Street. I think it's probably the greatest investment book ever written. And it talks about how he basically used his strategies, I think he was the Vanguard Fund originally, but basically how he used those strategies, to basically build one of the first $1 billion investment portfolios for an investment house. And his part of his whole strategy was, for instance, he would follow his daughters to the mall. And he would look at what shops they went to and what were filled with people. And by the way, I'm sorry, just in the post-COVID area, and for those of you who are listening, malls are places where we used to congregate, and actually people before Amazon used to actually go and actually buy clothing in stores. But and he would actually look, and he'd be like, okay, and then he'd look up who owned those stores, like what franchise owned them, and then he'd start looking at their financials. Well, from that book, you basically get the concept of we'll start looking at, what information can you get in a public context that you know that a company is going to sort of blow up in the next couple of years. So one of the ones that I was, fortunate enough to actually invest in about, I don't know, say about 18 months ago, and I've been riding is NVIDIA, which is a chip manufacturer. And I've been riding that thing, and I want to say I'm 200% in the last year, maybe 250, 300%. And it's been on a rocket ship to the moon. Why? Because we knew that the government was going to be dumping a lot of money into chip manufacturers because we want chip independence by, I want to think, in the next 2, 3 years. We know NVIDIA was building huge factories, and a lot of that money was coming from the federal government, and they are positioning themselves to dominate the chip industry very soon. And by the way, I'm not talking about Lay's and Doritos. I'm talking about microchips that go into everything from your Apple iPhone to your car today. And when you just know it's not insider information, you just sort of analytically can look at it, as Peter Lynch would say, and say, okay, well, these companies are going to go up because this sector is going to go up, and I've been rewarded handsomely for that. Okay. You want to hear about a dog?
Sure, go for it.
And what I got crushed on was Tesla. Everything looked good, and these are actually this is the business account for the actual company that I'm talking about. And we ended up, I ended up just saying, because again, the philosophy is your money should be working for you. If your money is not shooting up, or at least appreciating at a respectable rate, it's not working for you. And so I bought Tesla right before it split, and I think she had gone up to give or take about 900 a share. She did a three-way split down to 300. And I rode that sucker down to, I can't remember what it was, but I rode it down to like, I want to say it was sub 100. And I darn near sold then. And then I rode it back up to about 290, I think is when it got back up to. And I should have sold it then, but I'm like, no, 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 this is going to go 400. I know it's going to go 400 and it's going to be great for the company. And then that sucker is now, I think yesterday we looked like 173 or something.
Yeah, something like that. Yeah.
So, in a lot of times, they get a lot of negative publicity. I still believe in Tesla. I think it's an amazing company, and what Mr. Musk has done is, amazing and commendable, from everything says. I know he's in the news a lot for some of the stuff he says and all that sort of stuff, but just looking at, SpaceX and Tesla and a lot of other things that he owns companies people I know about. He's a visionary, and sorry if you don't like him personally, whatever. It's not math that his companies do very well and such. And again, I just think that Tesla's been a little bit struggling with different things and their balance sheet. I still think they're being traded at a bargain, in my opinion, but they're just not popping up like I wanted them. So their money in Tesla for me wasn't working just because it's not making me money right now, and specifically, it's not making the company money because we're talking about a small business investment account. But NVIDIA has already basically, since I rolled it to NVIDIA, has already basically brought us back to where we were, what we had lost on Tesla. And now that money is actually working for us. I haven't checked the market today, but I'm sure it's doing pretty well. So that's a couple of winners and a couple of dogs. Generally, the chip manufacturers are doing pretty well right now. AMD is another good one that I've seen. And then, just big growth stocks. Apple has been pretty good in the last couple of years. They're always going to be good because they're sitting on such a boatload of cash. And trying to think what other sectors right now, but again, look at YouTube videos. What stocks am I investing in today is one and stuff. Those guys are always really good at basically telling you some winners that are coming up. And if you really want to know a little bit of a secret on that, what I like to do on Sunday nights is look at, 2 or 3 of the different people that put out, what stocks am I looking at this week videos, but then compare which ones do they all agree on. There's usually about 2 or 3 a week. And usually when you got 2 or 3 of those stock picker guys on YouTube, they're telling you they're pretty good stocks for the week. They're rarely wrong. They usually hit pretty well. So that'd be one thing I would suggest in that rambling thing.
Awesome. Okay. And so is there a specific, like, if you could tell the listeners, is there a specific, like, when you go on to look up good stocks to purchase at this time being, is there a certain indicator or a certain thing you look for to detect if you want to actually purchase this stock or invest in this company? Or is there a certain thing that you, like a mindset you go through before moving forward with anything?
Yeah, I mean, I think anytime, like I'm still old school, and again, like, back to the Peter Lynch days, you really used to look at, PE earnings and things of that nature, and, profit to earnings ratio, and such as a stock, a tech stock may trade at a higher, multiple of the price to earnings ratio and stuff. So basically, it used to be back in the olden days, just for way of history, how you really valued a stock was you look at the price to earnings ratio, and and then is it trading at too high of a multiple? And they still use that, but I got to be candid with you. I don't think that that is the best indicator, because the market now moves in such directions because of these massive funds that can literally on a daily basis just say, we're going to put $1 billion in this stock, and that stock will just shoot up. And then they'll be like, okay, now we're going to take our profits, and they'll take it right out, and it'll just plummet. Uh, in fact, I think you had some experience, didn't you? GameStop. You want to tell us about that?
Yeah, I was actually going to bring that up. Speaking about do's and don'ts about investing, so I'll tell this little story. Whoever's listening, if you can learn from my experience, I think this is actually a really good conversation to have, Matt, because there's a lot of things that we've discussed so far about do's and background about investing, but sometimes people just need to know the do nots of what to not invest in. Now, I was young. I just started out trying to invest and what to invest in. And unfortunately, when I was in the workplace, I did have this one friend of mine that was heavily invested in good old GameStop back when it was on the rise a couple of years ago. I think it was what, 2020, I think 2021
Yeah, that's
maybe,
about right. Yeah.
or something like
When
that.
yeah, no, all the stuff went down with them. Yeah.
Yeah, or 2019. I can't remember exactly the date. Definitely, I kind of wince every single time I think about it. But what happened was he was coming in every single day into the office and just, you know, he's parading around the office about how much money he was making because he originally was on the Reddit thread, and the Reddit back in the day with GME, which is GameStop stock market name. And he kept parading around the office that he invested in the beginning when it was like $2 a share, and he had like 600 shares in GameStop back when it first started. And then it started to climb, and he was making thousands of dollars each day, and it was crazy to see that how quickly he was making that money. He could quickly pull it out at any moment. But he kept going, and I was, he was older than me, not too old, but he's an older person than me, and he's had investments in the past before, so I kind of trusted him in a way. And he, told me to invest now, get started on investing now, because you're wasting, potential money that you could be getting right now if you just throw some money in it. But by the time that GameStop was, or by the time I could get in it, it was about like $100 to $200 a share by the time I was going to invest in it. And so I held off. I was just like, yeah, this is just going to be, I've looked into it. It's just a hoax. It's not going to get up to the over $1,000 as people were most likely thinking it was going to land. And so I kept just staying firm, not actually investing. And then he came in another day, and he showed that, like, me on his phone, that it jumped up like another $100. So it was at $300, and then 350, then 400. And I was just like, you know what? This might actually be a good time to maybe jump in on this. I'm like literally losing potential money that I could be getting at this point, but I'm just not. I'm being too I'm just not wanting to do it just for whatever reason. And so I quickly bought, like, I think I bought like 10 shares into it, which was at that time a good amount of money for me. And as soon as I did, I cannot make up the story. As soon as I did, it plummeted. Like, it literally went from like 400 or $450 all the way down to like 150 to $200. I literally lost like hundreds of dollars within like minutes. It was terrible.
Yeah.
Um, so I just so with that being said, just when you move forward with stocks or investing, just kind of be very careful. Make sure you know exactly what. Now, the thing is with GME and GameStop, it was kind of like a rainbow in that case. Stocks never are like this, nor are they this chaotic or this volatile. But in this case, obviously, I fell for it. And look at the stock price now; it's at $13. Some people, Matt, believe it or not, some people still think and hope that it'll reach over $1,000 someday. They refer to it as going to the moon, is what they refer to it as.
Yeah,
Um,
yeah. That's
and
that's a good for them. That's nice. They also probably still believe in, well, I don't want to, there's no kids listening to this, but anyways, but yeah. Well,
yeah, so they still think it's going to go to the moon someday, and I did sell. I think I put like $2,000 into it originally, and I pulled it out, and I think I came out with like $1,000 left over, I think. So
yeah, it's painful.
yeah.
But it's a good lesson when it's like, and one of the things I think, like as I always say, nothing bad happens if you actually learn from it. And I think that, I think your lesson's good, but you also said something in there. I want to address it real quick because again, for the small businesses out there listening, but then in the individuals as well, you said it was a good amount, it was a good amount of money for me or, whatnot, or something. And I don't think that anyone should ever be feel that, well, what I can put in and invest is so de minimis. Why would I ever do it? Destroy that thought immediately. If you can put $1 away, put it away. If you can put $5 away, put it away. And the reason is you'll be amazed over you're not running a sprint, you're running a marathon. And you will be amazed that if you can just have the discipline not to get the fries with your meal, save the $3 from McDonald's. And yeah, sorry, that wasn't an attack on McDonald's. I love McDonald's. But basically just to put a little bit away until it hurts. But then, again, $1,000 or $2,000 to you. Someone who's listening to this may be like, well, I only have $100. That's fine. Someone who's listening to this may have $10,000 to put away, whatever, do it. Because it shouldn't be looked at as de minimis because it's an aggregate, it's a marathon. This is a life goal. This is not anything. So sorry, just wanted to address that because again, like you're doing it, but it's again, so never be de minimis on yourself or, and anyone listening out there, just get it done. Even if it's the darn change in your couch, get it done. The other thing that I think that illustrates, just like my Tesla example, very similar in both of us, right? We were right, we were wrong. What's your risk tolerance? What do we mean by that? Basically, there is an absolute possibility that you're going to invest in, I've been blessed because basically, NVIDIA, it's the best thing I've ever invested in, to be candid with you. Um, but, it'll eventually will tabletop off, and then basically start to fall and whatnot. And the question is, are you smart enough to actually lock in those gains? But so many people want to basically make the stock market like Vegas, and you're just like, woohoo, let me invest in something so I can make, 150% today. Like you're gonna look for those penny stocks and all that sort of stuff. But remember, like you found out with GameStop, they can shoot down as well. And so the really more reasonable play is look for stocks that have a long-term history of appreciation. I think Apple's a good one, like I said, and such. And it's right out there. You just go to Yahoo Finance, plug in, what you're looking for. You can even search in Google and basically be like, great stocks that, have done nothing but appreciate. And they'll tell you which ones. And yeah, they may only give you 5, 6, 7% a year. But again, you start adding that up and it's more than you had before, and it's appreciating, and you don't have to worry about those wild swings of GameStop and Tesla. They tend to just march forward. Second, or maybe third point on that, but it's really more second point on this one would just be is it's sometimes tough. You got to basically keep your thumb on the market, and you just once a day just sort of know where your stuff is. Whatever you're invested in, make sure you set like Google alerts, so that you get any corporate information that comes up. But you can't be emotional about it because the stock market, when I was a kid, it basically would just sort of go up and up and up, and then a little bit down, then a little bit up, then a little bit down. Today, you see these just dramatically violent swings every single day. Why? Because mega investors make money on swings. And so they send it up, they send it down. So, when I was growing up as a kid, maybe the stock market, the Dow Jones would go up like 30 points in a day. And they'd be like, wow, went up 30 points. That's great. Or, oh, well, the Dow was down today, down, 15, 17 points. So investors, were bullish on blah, 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 15 points. Today, you see these swings from, oh, it's up 500 points, down 500 points, 1,000 point swing in a day or two, which is just nuts. Why? Because people are driving it up. They're buying it when it's low. They're selling it when it's high. I'm sure it's these big investments house. That's my opinion that's doing this. The point would be is if you're going to ride this up, it's very easy to slide into a holy crap, it went down. Let me sell it today because tomorrow it's going to shoot right back up again because they're making money off the suckers that actually follow that. Now, I rode Tesla down. You rode GameStop down. So you do have to be savvy enough to know if is this really like it's not coming back, or am I not making money, or is it likely, I've been watching this zigzag pattern on this stock for 3 months, but it's overall going up. Like what's the average? So just you can't panic as an investor. You have to make non-emotional, well-informed decisions on your portfolio. And you shouldn't be effectively day trading with this, especially if it's a business investment account. You've got to just pick good stuff and ride it and hopefully ride it high,
Yeah,
right?
no day trading, definitely not.
Yeah, you can't do that. Anyways, let's see here.
Okay.
One other thing, if I don't know if you're going to hit it on here, but is where to get the money, by the way.
Yeah, yeah, go ahead and touch upon that. How do you get the money, Matt?
Yeah.
Show
So,
me the
and again,
money. Oh, sorry. Go ahead.
yeah, show you the money. Yeah, sorry. So it's sort of a dry one so far for us because normally we're like, I don't know, because we're talking about money. Money's just dry. But there are two different guys that I like both of their thoughts, even though I think that they don't necessarily agree with each other if they put them in a room. If we put them in a room, and that's Kiyosaki with Rich Dad and Poor Dad, who basically believes that there is something as there's something, like there's good debt, as he would say it. And then there's this other guy named Dave Ramsey, who's just like, there's no good debt, that's, just be completely debt free. So twisting this towards, your business, do where you're going to get the money to open a business investment account? Well, the first thing would be is hopefully from our book Profit First that I've now mentioned 3 or 4 times. Um, Guy's not even giving me a royalty, but then again, I'm pretty sure he sells a lot more books than I do. So, he probably doesn't need to. But the point would be is hopefully you can just segment out part of your profits to basically start that business investment account, grow that business investment account. So once again, you've got that money, that other source of income, or just that other security net for your business from your profits. In essence, bootstraps, right? Um, there is a possibility. A lot of times you can get extraordinarily, depending on coming through different time frames and all that sort of stuff. Coming through COVID, I know it was very popular to get small business loans that they were giving extraordinarily favorable rates on from the SBA, and then people now use those for their investment accounts. So again, that would go against the Dave Ramsey philosophy, but possibly with a Kiyosaki philosophy of the first, and I think the best way to do it is do it from your profits, because you don't want to go into debt to basically have an investment account, because then you're just paying that down. However, if you are good enough and you've gotten good enough at investing to the point that, let's just say you were able to take out $100,000 loan, and for whatever reason you get extraordinarily favorable interest rates and all that sort of stuff, and you're only paying, let's just say, like $350 a month on that $100,000 loan, and you put that $100,000 and you're earning 5% on that, is that 5%, 5,000 divided by 300? I'm trying to think. I don't think that actually works. I think the break even is more like 6 or 7%. But if you can earn 6, 7, 8, 9, 10% a year on that, you can both service the loan, pay the loan down with your profits from the investments, all the while basically, in essence, using somebody else's money to basically create your own investment account. And that's a very popular way of doing things, so long as your investments don't go down like ours did in Tesla and GameStop. Then you got a problem, right? So two different
Exactly.
ways to do it. Yeah.
Exactly. I think that's a really good advice right there, Matt. And just one other thing I wanted to touch upon is just going to kind of dovetail on what Matt also said as well, is that, just like with life, with anything, there's going to be risks, and there's going to be sometimes there's going to be, failures and sometimes there's going to be successes, and investing is no different in this case scenario. There's actually someone, and Matt, maybe you can agree with this or not, you're probably going to have more failures than you're going to have successes. Right, Matt? I mean, it's really difficult, especially when you're starting out. Might seem like such a huge, you can't really see exactly. It's like you can't exactly tell what the future might hold with the company. All you can really do is just like with any like thing I said before, is you got to take a risk to be able to succeed sometimes. So this is exactly the same thing. Um,
Yeah.
so
Yeah. I mean,
yep.
absolutely.
Yep. So I think that'll pretty much do it for us today, Matt. Really good stuff we talked about today. We'll definitely have another podcast again, and touching upon investing. Just kind of give more updates, more advice on investing in stocks and everything. So I think this is really good. In conclusion, investing is a journey that requires patience, discipline, and knowledge. To everyone out there listening, by understanding key principles, and selecting suitable investment vehicles, you can work towards achieving your financial, aspirations, just like with anything. Remember, investing is not a one size fits all approach. It really does. It's all about aligning your investments with your goals, risk tolerance, and just depending on when you want to enter and start investing in general. So just everyone that's listening, just know that this is a great step forward towards your future, just like Matt has said before, and just look forward to a bright new future with your retirement funds. Matt, and do you have anything else to say?
Nah, just peace out, everyone. Thanks for listening.
Yeah. So this is again Jacob and Matt today here with Small Business Chat. We thank you for listening, and I hope you guys have a great rest of your day and great weekend. Thank you.